Okay, I can see one person is here already. I will be using my PC to check your charts. I think that's what I will be doing. You can see my screen, right? Okay, let's go straight to trading view. um I don't know how we are going to do, because I should be, I think, let me check my YouTube channel and probably use that to check your comment section, so that I can see whether you guys are hearing me. um please give me some moments right here. I'm trying to access my channel via PC, so that I can look into your comments and understand what's going on. If you can see my screen, I think I've opened the comment section right now. I've opened the comment section. If you can see my screen, I'd love you to type. I can see. Okay, please give me some moments. Okay, okay. Okay, yeah, I've connected now. All right. So, I'll be explaining concepts. I should mute the. Let me mute. Concepts of markets, price delivery. Concept of price delivery. What delivers price? What delivers price? How price move? What makes price move? Please, is it not just three of you that is here? Is it that others can't join? I'm seeing only three persons right here. I still need to go back. I'm very sorry. From after I'm done with you, I will just set up so that it will be easier on me next time. If I'm using PC, it could have been more easy, because now go trade. Okay, you're welcome. Please, once you enter, you comments, I can hear you, so that I'll be sure. I'm looking at my PC now to check comments. I think the comment section is open. Yeah. So, concept of price delivery. In other words, what am I trying to say here? How does price deliver? Yes, because if you don't understand how price deliver, what makes price move a certain way, you cannot understand bias. Yes, because once you don't know the bias, you can't. There's difference between bias. There's difference between narrative. They're not the same thing. For those of you that are totally new, how many of you are totally new that is with me? Those of you that are totally new, you don't have any idea of what we are doing. Comment section is open now. you're totally new, you don't have any idea what's going on in the marketplace, please hope the comment section in this life is accessible. Huh? I mean in this life, don't mean WhatsApp. You can comment now, right? Because I'm not seeing it from my laptop. Okay, I will just go on. Please, I need to apologize. I'm very sorry because of I had a meeting somewhere and that meeting closed 7:45. Rushing back, I thought I could set up my PC and start the class, but I don't know what's wrong with my Zoom. I've tried and it's not coming through. Probably tomorrow I'll fix that. So, most importantly, concept of price delivery, market price delivers in four stages. We have phase, the we have number one way price deliver is we have the expansion phase, the expansion expansion phase. Sorry about that. Phase. Then price also consolidates consolidation phase. Price sometimes retracement phase, and price reverse reversal. So these are the basic things you will see every time. These are these things that price does. Like New York session today, because I trade basically the New York session, specifically 9:30 opening bell in Nasdaq. When I opened the chart today, I saw nothing on Nasdaq to trade. Nothing. The only trade I took in Nasdaq was in the morning time. I saw some setup. I think did I share that on YouTube? Yeah, because I don't know. I shared probably my Facebook or TikTok. So at 8:30 New York time, nothing happened in Nasdaq. 9:30, nothing happens in with Nasdaq. So that it simply means price at that stage is one place. Nothing is moving. So once I see this type of thing, automatically I know that okay, I don't even need to stress myself. I can't be in the market because I'm a scalper. I react fast to the market. I can't sit down in the marketplace for 15 minutes. I don't have any idea of what the market is doing. I'll just shut down my system and go do something else. That's how I work because I know with experience that if I continue to sit down there for the next 30 minutes, I would like to force a setup to reward my time of sitting down there. So once I sit down and open my charts, start because what I do is 15 minutes. I'm a scalper. I use 15 minutes and 1 minute. First of all, I go to 15 minutes, look which phase is the market in that session that I'm trading. Is either the market is about to enter into expansion phase, or the market is entering into consolidation, or the market is what? Retracing. These are the three things that happen, or we are going to have a reversal market. So when once the market is expanding, it simply means the market is showing willingness to move in a particular direction, either up or down. That is an expansion phase. The market is already showing you willingness to move in a specific direction, either up or down. That's why we have example of this. We have an uptrend. We also have a downtrend. You can see an expansion phase. This is an example of market expanding to the downside. This is 1 hour time frame in gold. As a scalper, in which I will show you a particular strategy that I'm using. As a scalper, this 1 hour candle, just this 1 hour candle is enough. This particular 1 hour candle, because highest I stay in the market is 1 hour 30 minutes. So this 1 hour candle has given me what I'm looking for. It has given me my normal 1:1 or 1:2. So anytime I come into the marketplace, I want to see the willingness of the market expanding. This is the type of market I'm looking for. And if you look at it, it was Monday, November 25th. That's the down part of this. Monday, November 25th, 2024. This is New York time, 9 o'clock New York time. That's why if you are following me, first of all of you that are following me, you download TradingView, your time frame should be set to New York time always. Your time must be locked to New York time. Your default time, where is that? Should be somewhere. I don't know where that is now. That's -5. So please, probably I will screenshot how to do that. But let's just go straight to what we are having this evening. So what are we talking about? Anytime you as a scalper, if you have coming to full, you are here to learn how I do my stuff, how I do my execution, I'm always looking for expansion. In other words, I'm always looking for, there's what we call low resistance liquidity run. I'm going to explain all those stuff. But first of all, there's always a time the market expand. There's always a time the market consolidates. There's always a time market retrace. There's always a time the market reverse. So the condition I'm always looking for is, once I stay my first 15 minutes, I want to understand, are we in an expansion phase? Are we in consolidation? Are we retracing? Are we reversing? Most times I'm looking for expansion phase in lower time frame, which I might not explain that this time, but I'm just want you to have this basic knowledge that we are having 3 types of price delivery. We have the expansion, we have consolidation, we have retracements. Consolidation is when the market is in a range, it's just one place, going up and down, within a range. Let me show you something. As a scalper, if the market, that's why if you watch the reel I did yesterday, I said I need to see price move out of that particular range. There was a range I was marking. I indicated that. I said I need to, before I buy, I need the market to move out of this place before I buy. If you go back to that reel, you will see I stated it clearly. When once the market is consolidating, it's a trap if you buy, because as a scalper you find out that your stop loss is just 2, 3, 4, 5 pips. So if you are going to follow my strategy and do what I do, you must definitely understand when the market is consolidating. Then you wait for it to give you a signal of an expansion movement. So what am I saying? When the market is bouncing within a range, price is at that point consolidating. Price is one place. Price is not moving anywhere. Price is standing one place. So in that type of condition is where you lose your money. So sometimes you might not know this while trading, but once you discover it, that's why we say anytime you take the first loss, you take the second loss, don't allow it. You might not know that it simply means it was a bad day, or probably you were thinking it's an expansion phase, whereas it's a consolidation phase. What you simply do, don't take more than 3 loss. Just shut down, close your system, come back the next session, or you come back the next day, because this business is 80% psychology. Just think what I'm once I introduce you guys to my strategy, it won't take 15 minutes. You just see it, but you must understand the basic thing. So this consolidation phase is when the market is ranging, and once you don't know that you're in consolidation phase, in which I will explain, you find it that you'll be trading and you'll be losing money. You'll be trading and be losing money because your 1 minute was in a consolidation phase. Although 1 hour is moving, 1 hour might be expanding, but your 1 minute that is our entry, I entered via 1 minute. So when the 1 minute candle is consolidating, this we call it time. I call it time distortion, either waiting for a macro, or is about is because of a particular, sometimes bank holidays. Those type of days I don't even open the chart most times. You must be experienced, because bank holidays have done me something with my experience. So most times banks holidays, when New York have bank holiday, don't open the chart, because 90% of the time the market will be in consolidation phase, retracement phase. For example, if you're having an uptrend, price, example of uptrend, price goes up, comes down, goes up, come down, goes up. This is an example of uptrend. And you must have an understanding of this. When you are trading this type of market, the retracement in the lower time frame, if you are trying to scalp, because what we do is in and out of the market, you understand? So most times, if you understand, for example, you can have a, because price is moving in fractal, you might be having uptrend in 1 hour time frame, but if you come to 15 minutes, it might be presently at that moment a downtrend movement. So anytime you are having a retracement in an in a higher time frame, our higher time frame here is 15 minutes, because we are scalping. So anytime we are having a retracement in 15 minutes, it is difficult to enter a trade in 1 minute. I don't know whether you understand me. Yes. I'm just bringing in. You guys should be calming down. All these things you will understand. This is just our first class, please. So, anytime you are having 15 minutes, you are retracing. You are having a retracement in the 15 minutes. One minute entry will be difficult. That's example. I said there was a particular video I was doing with a particular drill I was doing with my private students. I was showing them when you have high resistance liquidity run, these are things that causes it. You enter a trade, the trade will be within that your place of entry will be dangling, either to go to stop loss. Sometimes your prediction, you were anticipating buys, before you know you hit your SL, then move to the buys. You are entering at the retracement point. Then we have total reversal. For example, we are having an uptrend here, like we have here. I'm so sorry. This using phone to do this is hard on me. Please, you guys should bear with me. I thought maybe probably tomorrow I'll have everything fixed. So this is an example of uptrend, and once this this is protected lows. We have high, we have lows here. This turning point that makes this retrace is what we call swing. So this is a swing high and this is a swing low. This is also a swing high and this is a swing low. Anytime a swing low breaks the previous swing high, this particular swing low moves to breaks this particular swing high. You often see me write something like BOS. If you have been watching my reels, you'll see something like this. I come here and do something like this. I'll show you this in the chat as anyway. You see me do something like this and write kind of BOS. That's break of structure. Once the structure breaks, once this low breaks these highs with this, automatically we have gotten a break of structure. This low that breaks this high has become a protected low automatically as well, creating what you people generally call a support. But it's not a support. I'm going to explain that in a future class. This low, this particular low that breaks this high is called swing low. This high is called swing high. This new high that it forms will, if it's an uptrend, it is known that it should not come below this low because this low is automatically called protected low, protecting any price movement from coming here, making this an uptrend. You understand? So anytime price aggressively comes to this low, we call it there is a what? A break of structure. A break of structure or a reversal pattern. It simply means if price peradventure comes here and breaks this low, because what it's supposed to do if to maintain this uptrend, it's supposed to come here and go back again. But anytime it comes beyond this low to do something like this, automatically we call this a reversal pattern. Price is willing to reverse to the downside. This will make sense. This is the basic reasons for my entries. These are patterns I use to enter trade from my 1 minute, sometimes 15-second charts. Yes. Okay, that's aside. So we have three types of four types of price delivery. Price deliver on an expansion phase, it delivers on a consolidation phase, some most times price retrace, then most time price reverse. So when price reverse, it simply means the price has changed direction. Yes, price has changed direction to a different phase. So that notwithstanding, what makes this price change or price move? Basically, we say there are two things that moves price. Price either moves because of liquidity or price moves because of fair value gaps. Two things makes price move. Price move towards liquidity zone or price move because of inefficiency, which we call fair value gaps. That's why most of the time you see me draw box like this. Box. You see me draw box. You don't know what was behind the reason I drew the box. I'm doing or sometimes most of the times you see me do something like this in my reels. My time is up. Shit. I have a meeting by 9. That's why I wanted to start this class early. Okay? Please, I'm sorry. It's just most of the time you see me do something like this, buy side liquidity. Sometimes you see me do something like this. This one that my Zoom is not working. How am I even going to have? Okay, we have, you see me do something like this. So, okay, this is very important when we are talking about um, price movements. What moves price? Price move either towards an inefficiency, which is example. We are going to bring these topics as bit by bit. Fair value gaps. Example of inefficiency is fair value gaps. We have liquidity void. We have gap. We have opening range gap. There are many. I will explain all of them. So price, what normally draw price is either because of this inefficiency, any type, either opening range gap, new week opening gap, all those stuffs, or price is moving, or what is drawing price is because of liquidity, buy side liquidity or sell side liquidity. Do you understand? So there are two things that moves price: liquidity or inefficiency. I'm going to show you with time how this works. Probably tomorrow we'll be talking about fair value gaps, because inside fair value gap we have two types of fair value gap, which I will explain tomorrow. Yeah, fair value gap we have inversion fair value gap and the normal fair value gap. I will explain that tomorrow. But what I want you to understand that today, at least basic, price moves in four. Oh shit. Price, this guy have started calling. Price move table. Andrew, bring it please. Okay. Price move, guys. I need to summarize this, please. I wanted price moves in two form, either with using um we said by liquidity or by inefficiency. I think that's what I will start tomorrow with. Example of inefficiency. This is an inefficiency called fair value gap. We have many of them. We have CB, we have BC, but this one now is CB, sell side imbalance, buy side inefficiency. I will explain why it's called that tomorrow. This thing is a fair value gap, but it specifically is sell side liquid inefficiency, sell side liquidity, buy side inefficiency. I'm going to explain that tomorrow. Please, I'm very sorry, guys, for turning in very late. Um, Tomorrow we might start earlier. It will cover everything about fair value gap, how price reacts at fair value gap, because fair value gap is price moves towards fair value gaps. Very important. I'll show you how price move towards it, what makes it react, evidence that is going to honor the fair value gap, because most times people just think that when once price reach fair value gap you need to sell, like this one. Now you can see example of how price came. Look at this right here. You saw once price came inside this fair value gap, you notice what it did, it reversed and it's still going down now. You understand? There are things to look for when price is inside this fair value gap before you know either to sell it, because it's dropping now. Gold might drop to this, um, we call this relative equal lows in lower time frame. This might push price towards here. Do you understand? But once price, where would be my point of interest to sell is this fair value gap that I just drew. But there are things to look for, because we are scalper, and just this one black candle is enough for us to get what we are looking for. This long black candle right here now is just enough. But there are things to look for inside this 1 hour fair value gap before we say, okay, let's dial in the sell.